Thank you very much. Good afternoon to everyone. It's a real pleasure to be here at ODI. I would like to thank the organizers of this event. This is a great opportunity for the international community, and particularly the Inter-America Development Bank, share some of the finding of our research. The research focus on the tax system in Latin America and the Caribbean, and also make comparisons across other regions, and particularly comparison with OECD countries. That was the standard that we looked for. It was a work that lasted approximately 18 months, 2 years. And we tried to cover the macro aspect of the taxation system, and then went into more details in terms of the tax by tax, the structure of the taxation in the region. The objective here was go beyond just focuses on revenue. The objective was to try to find where the gaps for other objectives that the institutions pursue, particularly whether the taxation system can help to fight inequality, to promote productivity, and to protect the future. Obviously, in this presentation, I'm not going to cover everything that is in the book, but I would like to highlight some aspects that I think are relevant for the discussion. And we'll focus on in general, two aspects. One, in the characterization of the taxation system and the myth of the reality of the system in LAC, and then conclude with some essentials and policy recommendations. Three characteristics are often mentioned that define the taxation system in Latin America and the Caribbean. One, that the tax burden is low. Two, that taxes are regressive. And three, that there is a large evasion. And what we want to see in the analysis was whether there was myth or those are a reality. Let me start with the first one. Is the tax burden low? Then, in order to avoid any confusion, I will jump to the conclusion. Yes, particularly in personal income taxation, but the region experienced the most significant rise in overall tax burden in the world over the last 20 years or so. So there was something that the region did well in terms of increasing revenues. Today, as a percentage of GDP, the tax burden represents about 17% of GDP, which is at par with Asia and Africa, but substantially low compared to OECD countries. Given its potential of economic development, measure this as income per capita, LAC should have a potential increase in taxes and in tax burden in the order of 3 percentage points of GDP. So there is a potential increases in revenue given the state of development of the region. If we expand the measurement of tax burden and include Social Security contributions as well as the proceeds from natural resources, then the adjusted fiscal burdens, as we define, increases to about 25%. And this is still below the OECD average, which is about 35%. But there are other countries in the region that are approaching to the OECD countries, such as Argentina, Brazil, as an example. Still, the adjusted fiscal burden per capita is 10 times less than OECD average. OECD average is about, in terms per capita per taxes, is 16,000, while in the region is about 1,600. Those are the two extremes in that graph. you can see if you compare the period 1994 to 2006, 2010, the OECD, which is the left bar, remained more or less the same, while on the right-hand side, for the Latin American and the Caribbean region, it has increased significantly from 18% to about 24%. So what it means is that it's a convergence toward OECD standards. And we standardize as an index of 1. We see that on average, on the left-hand side, Latin America today has an index of 0.87. And there are countries, such as countries in the Mercosur, as I mentioned before, that are close to the OECD averages. As I mentioned before, during the last 20 years, 1990 to 2010, Latin America and the Caribbean experienced the largest increase in tax burdens in the world. And that increase amounted approximately to 3 percentage points of GDP, above of other regions in the world. And that took place in all the tax structure in the region. Personal income, corporate tax, corporate income tax, and particularly value-added tax that moved from 4.3 percentage point of GDP to approximately 6.3 percentage point of GDP. And that also was across all the countries, with the exceptions of 3 countries which are on the lower part of the graph, Venezuela, Mexico, and Trinidad and Tobago, that happen to be oil exporting countries. All other countries have made major advances in terms of improving fiscal revenues over the period from 1990 to 2010. And you can see in the case, for example, of Argentina, the increase was significant. It was about 12 percentage points of GDP. However, there is still room for increases in terms of tax burden. And this is a measure of tax burden. All to the left imply that there is a gap that one can cover through time. And that is measured in terms of GDP, which are the bars, and in terms of the circular point, which include other structures of the economy. It's an econometric model in which have determined the structure of the economy and what is the gap that can be covered based on what the development of the economy is and what they can potentially achieve. And this is even more significant in terms of the income tax burden gap, which is on the right-hand side. So the gaps that you can see that can be covered is significant. And particularly for the case of Argentina, Uruguay, which are in the lower part of the graph, the gap that can be covered through the income tax burden is significant. We also compare the differences of the tax burden and where are the differences contrasted with the OECD countries. And as a summary of this is basically on personal income tax. Latin America and the Caribbean collect on personal income tax approximately 1.4 percentage point of GDP, while OECD countries collect 8 times more than LAC. Second myth of reality, are taxes regressive in the region? And here is a maybe answer. And there are significant losses to avoid the value-added tax regressivity and to promote progressivity on personal income taxes. Those are the major findings in terms of taxes regressivity. When we measure the incidence of the value-added taxes on income and on consumption, and we graph the effective rate, The red line is measured against income, the incidence of VAT based on income deciles. And you can see the lowest portions of the income distribution, the first or second deciles, pay an average effective rate significantly greater than the wealthiest of the taxpayers. When we compute that based on consumption, which is in fact a better approach for permanent income, the regressivity almost disappears. And in fact, it's slightly progressive. So the myth that the value-added tax is regressive depends, therefore, on the way that you are measuring. The value-added tax constitutes the major pillar and foundations of the Latin American and Caribbean tax system. It represents almost 60% of what is collected from taxes, and it's quite effective. And we compare the productivity against the productivity in OECD countries, and the Latin American VAT productivity is a little bit higher than the OECD countries. And in fact, in OECD countries, on average, the value-added tax is about 80%, the rate. In LACs, the rate is about 15%. So it's quite productive. Now, when you compute the efficiency based on consumption, and the efficiency is the ratio of revenue to consumption divided by the rate, that efficiency now disappear in terms of comparisons with the OECD country. And what is that? It happens that the system in Latin America and the Caribbean has a lot of exemptions. And therefore, when you eliminate certain consumption, the effectiveness and the efficiency of the taxation disappear. This is also evident in terms of other exemptions, and we computed the tax expenditure as a percentage of revenue and how it's distributed across the income distributions. On one extreme to the right, for example, Peru, where they have relatively low tax expenditure, but it benefits basically to the richest part of the taxpayers. On the other hand, Costa Rica, for example, has the highest level of tax expenditure, and it doesn't necessarily target to the lowest part of the income distribution. This is more even evident in the case of the personal income tax, where in design is properly, progressively designed, but in practice, due to 3 or 4 factors that I mentioned in a short while, the system is an empty shell. Based on collections of income taxations, as I mentioned before, is equivalent to 1.4 percentage point of GDP, significantly lower to other countries, and particularly to OECD countries. And there are 3 major reasons why this is the case. One is the bracket and the rate structure of the bracket. When we compare the Latin America and the Caribbean, that is presented in that graph, against other middle-income countries, the brackets and the rates are below overall the income distribution. Secondly, we also compare tax wage for employee without children in the 6 deciles for OECD versus equivalent in Latin America. And for the 6th decile in Latin America pays 0 income taxation. However, in terms of Social Security contribution, both by employers and employees are more or less equivalent. So what we have is, if we plot the average effective rate against the income distributions, we have that 80% of the populations in Latin America and the Caribbean pay 0 in terms of income taxation. And the very rich, the 20%, riches pay on average effectively 4%. Remember, I don't know if you have followed the US elections, Mitt Romney lost the election when reported that he was paying 13, 14 of average effective rate on income. So in Latin America, that's even much lower. So as a result of the poor design, generous deductions, and significant evasion, the progressive income tax on paper, completely disappeared in terms of reality. We also calculated the impact of the taxes in terms of changes in income distributions before and after taxes with almost zero effects. So in real terms, income taxation have no income distribution impact in practice. Third myth, is evasion large? Yes, and particularly on income taxes, is lower in value-added taxes, and this is so because it's easy to evade and risk-free. We calculated the large evasion, which is another blow to equality. On corporate income tax, it represents almost 60% of what is the potential revenues that can be obtained from corporate income tax. Personal income tax is about half, and value-added tax is about 25%. And this is so because there is a minimum chance of being audited. In Latin America, 10% of the populations are registered taxpayers. This compared to about 70% in OECD countries. And of the 10% of registered taxpayers, only 3% annually have a chance of being audited. Of these taxpayers, only 0.2% have subject to in-depth audits. So the tax administrations is relatively weak, and there are significant efforts to improve. Despite that, over the last 20 years, so we have seen significant changes and improvement. Let me try to conclude now with some positive aspects from the reforms that have been taking place over the last 20 years or so. Governments have implemented reform both on corporate income tax, on personal income tax, on value-added taxes, and the reforms were basically either to increase the taxable base or increase the rates. And this graph represents the number of reforms in the different areas, with significant effects on value-added tax, as you have observed previously. There are also significant advances on environmental taxes or on environmental-related taxes, such as taxes on gasoline, for example. Despite these advances, some countries are doing relatively well, such as, for example, Costa Rica and Dominican Republic, with taxes on gasoline, and therefore internalizing some of the negative externalities of the consumption of gasoline. But there are still potential for improvement. OECD countries collect on environmental or environmental-related taxes 2.5 percentage point of GDP. In LAC, that amounts to about 1 percentage point. So there is room for improvement. Lastly, it is well known that productivity is very low in informal economy. And even large economies such as Brazil, which is on the right-hand corner, with an informal economy is around 40% of the total economy, require some changes. And changes in the tax system is one way to increase the possibility of advancing and formalizing the economy, as well as improving productivity. Let me finish with some essential in terms of policy reforms that are coming out of this analysis. On personal income tax, one of the major things that the region can continue to improve is reducing minimum exempt level, cap deductions progressively, and adopt a dual income tax. The dual income tax basically is taxing personal income as well as personal capital income differently at different rates. One of the reasons why the income taxation is low is because most of the personal capital income is exempt from taxation. Rents, for example, dividends, interest payments in most of the countries are exempt. Second, on corporate income tax, even though I didn't go into detail, but it's in the book, some of the aspects that had to be considered are phasing out the special regimes, reduce tax incentives, and potentially even decrease taxes in order to increase the incentive for savings, which is in the region is relatively low. Finally, on value-added taxes, eliminate exemptions, unify rates, expand the base. This is possible, and we are proposing what we call it the P value-added tax, the personalized value-added tax, in which you tax all consumptions and all consumers, and then you transfer back the equivalent in order to make it progressive for those consumers that are in the lower part of the income distribution. And finally, think about reducing payroll taxes because this is one of the major reasons of the informal economy, particularly in the labor market. All this together will continue strengthening the tax administrations and fighting evasion. With this, I conclude here.
Thank you very much. That's very, very rich indeed, and exactly on the 20 minutes you asked, so thank you. There's a huge amount in that presentation, clearly, and that's just a summary of the book. Fortunately, we have 3 discussants to help us digest it, and then you'll have a chance to ask any questions. I think we're going to start probably Francesca and then Philip and then come to Mick and sort of generally sort of starting and broadening out the discussion. We'll take about sort of 5 or 7 minutes, 3 contributions, pick up a few questions, pick some more from the floor, and then come back to Vicente for any clarifications or further points.
Sure.
Thank you. Francesca.
Thank you.